Hi folks, this is Deepak and Vashisht on how we display FII data on Slack. What does this mean when we say suckers index or we say FII DI positions? There's so much stuff we demonstrate, but first let's take you through a quick summary of how we get this data and what we do with it. So the data actually comes in from the NSE. We actually look at the daily reports on the derivative side, and there is a bunch of copies in there. One of the things that we look at is the participant wise open interest. And one of the things that actually come out of it is the data that comes in for us on a daily basis is data for domestic institutions, DIS, FIIs, which is foreign institutions, pro, which is brokers, prop accounts, and client, which is everybody else, which typically includes retail. We get data for long future positions. This is the open interest at the end of the day, long and short. They don't tell us which, whether it's the Nifty future or the Bank Nifty future, but you just get the index futures position. Stock long positions on the futures, stock shorts, call longs, put longs, call shorts, put shorts, and so on indexes and on stocks. We actually use this data. We do a lot of mixing and matching and trying to figure out things, and we get this data across to you. So let's go back into the presentation and see where we actually derive this data from and what does it mean. The first thing is the suckers index. You know that retail and retail being not FI, not foreign institutions, not domestic institutions, not brokers, they are typically the least sophisticated player on the supposed to be at least the least sophisticated player around. And people who go long options would be the least lesser sophisticated among these retail investors as well. So if you look at retail positions which are long options, and use the put to call ratio. That means the put option open interest divided by the call option open interest, which is the PCR. We will actually be able to draw this graph over time. The blue is the put positions dotted, the orange dotted is the call positions. Sorry, the blue is the call positions, orange is the put positions, and the dark blue line is the PCR or the retail PCR, which we call the suckers index. You can notice that typically when this forms a bottom, the PCR forms a bottom, the index tends to rally a little bit up. When it forms a top, it tends to show that the index starts moving down. It will start looking at it around from 2016 because contract sizes changed in the end of 2015 and a lot of changes happened in the first 2 months. So what actually happens is the retail put call ratio, see the number of calls, a lot of retail were very long during this entire down move, and the put to call ratio was trading substantially below 1. It started to go above 1 around here in February, and you can see then from there on the index post, well, just the end of February and early March, the index went way beyond 1 and the index rallied. That means when retail started buying more puts and less calls, the index rallied. When they were doing the opposite, the index would fall. That kind of tells you who the sucker is in here. We use the suckers index as an indication of whether the market's likely to go up or down, and we match this on a daily basis, and we tell you at the end of every day how the position fares right now. It's more important to look at the trend than to see the actual number, but typically an extreme is around the 1.8 or the 0.6 position now. That's where you're likely to see a swing around. More closer look today is there. We have something over here which tells you about, this was just about the last few months. I just want to show you this in more detail. uh, and we're going to now also look at the daily trading data, the FII trading data, which tells you the total amount of cash positions they've bought minus the cash positions they've sold is in this graph. The blue is the FII, the foreign institutions, and the orange is the DII, the domestic institutions. We've got a bunch of things over here. Now, a lot of these spikes come in. Sometimes this is because FIIs may have actually purchased a stock where, say, Indian promoters are selling. That actually counts as FII buying activity. Sometimes two FIIs, they may buy and sell from each other. FII might buy from a domestic institution and so on. So all of these things that we encapsulate, you can see over here. For the last few weeks, FIIs have been largely in the buy mode. Domestic institutions typically play the opposite role, so they tend to be on the sell mode. Here is the graph on the right hand side where you see both. This is the net position, buy minus sell on the left hand side. On the right hand side, you see the buys and the sells differently. So if foreign institutional buys are the blue, is the top light blue line, and foreign institution sells is the bottom orange line. They tend to be a much bigger player than domestic institutions. The domestic institutions buys are the inner lines in over here. They just tell you how to interpret the trading activity itself. If there is a very little net trading activity, you might look at the positions and say, well, they have still been big buyers. They're buying 5,000 crores worth of stock and selling about 4,800 crores worth of stock. So that it gives you an idea of whether their positions are much larger than earlier or lesser. The activity is actually demonstrated in little tables as well. You've got the trading activity of the last 5-6 days, which is posted in here. Red meaning they have been sellers, DII, and in this case, FIs have been buyers. We've got the traded value, which is you've got cash traded value volumes in total. And this is on the exchange. This does not have to do with FII or DII. This just gives you an idea of whether the volume is more or less than usual. For futures and options gives you another indicator. Here, of course, you have the problem of the options data complicating things quite a bit, so it may not be such good an indicator. Derivative statistics overall, if you looked at not individual index versus stock and calls versus puts data, we actually have some data which says index futures FIs are long and index options they have been selling. We don't know which. This is just a generalized post to give you an idea of the last 4 or 5 days. The only useful item here is the index futures data where we can say that they have been buying more or selling more, selling less. So here they've been buying lesser, just an indication that they're still long but they're just buying lesser. The net interest, we now take look at this and from a perspective of if anybody is long, they could either be a long a future, a long call, or a long short a put. So if you look at the long positions of anybody, they will be, if you add up all their open interest on the long future plus long calls plus short puts, that's the net long position, and the net short position is effectively short future plus short call options plus long put options. If you add up all this open interest, we will get a position of the to how much is the total long interest of an FII or of a DII or of retail or so on, and the net of these two, which is the long minus the short position. The client positions over here would tell you, which is the yellow line, tells you where we are with respect to total number of net open contracts, which the clients have been long for a long time. They have gone short sometime, as you can see, in June and middle of June, and have been kind of more or less short throughout. The blue line is the foreign investors who've been starting to go long, and of course they had gone short a little bit, and they tend to behave exactly the opposite of retail, client being retail. And the smaller yellow line is the brokers. These guys are not very big players, but they do tend to be very close to the direction of the index. So when they're long, the index tends to go up. When they're short, the index tends to go down. You can see over here and here. So they're a good indicator, but they're a much smaller player. We just plot this on a daily basis to see how things are. Right now, everything is a little constricted, but you can see how they have been at varying points substantially earlier. We hope that this information is going to help you become a more informed trader, but more importantly, remember this data is not something that's useful for trading immediately. It may be used to build portfolio biases. So you might say, I want to be biased on the side of an FII. So every day, at the end of the day, I decide what my next day's bias is going to be based on what portfolio investors are doing right now. So if you choose to be with the foreign institutional investors, then you'll probably modify your positions to be appropriately biased in that direction. We hope this is of use, and if you have any questions, please ask on Slack. We hope this clarifies. Cheers and thank you so much.